Welcome back to Investing Talk Podcast. We're here again to take some complex information, stuff we've dug into on specific companies, and really try to boil it down for you, make it clear, give you some actionable insights. Today, we are doing a deep dive into a company called Firefly Neuroscience. Our goal really is for you to walk away feeling like you've got a solid handle on where this company stands right now. Understand its technology, which is pretty innovative, and also the financial picture it's dealing with. It's interesting. We want you to have those aha moments, get the context, not just the facts. And hey, if you find this useful, please think about hitting subscribe, maybe leave a like or a comment. We appreciate it. And if you feel like supporting us even more, you can always buy us a coffee. Seriously, thank you for that. Okay, so let's jump in. Firefly Neuroscience. What exactly is this company? When we looked into it, well, they're not just your standard medical device firm, are they?
No, not at all. They really sit at this crossroads, medical technology and artificial intelligence. And their goal is pretty big. They're aiming to develop neuroscientific solutions for some really tough conditions. We're talking mental illnesses, neurological disorders, the complex stuff.
Right. And their main product, the core offering, is this brain network analytics platform, BNA.
It's the one, BNA. And critically, it's FDA 510K cleared.
Which is a big deal, right? That clearance pathway.
Oh, absolutely. It means it's substantially equivalent to something already on the market. It's a faster route than, say, a full pre-market approval. Huge strategic plus for a company trying to move quickly.
And this BNA platform, it uses AI, machine learning, on brainwaves from EEGs.
Exactly. It digs into that raw EEG data. Think of it like a sophisticated translator for the brain's electrical signals.
And what does it help with, clinically speaking?
Well, the idea is to aid diagnosis and monitoring for a whole range of things. Depression, dementia, anxiety, concussions, even ADHD. Big areas.
And who are they selling this to?
Two main groups right now. Pharmaceutical companies for drug research, clinical trials, makes sense, and also directly to medical practitioners, for use in clinics to help with actual patient care.
Okay. So that positioning, AI and neuro, it sounds quite cutting edge.
It is. And what's really interesting is how they're positioned. It's not just about saying you have X condition. It's about using these huge data sets, using AI to tackle problems in neurology and mental health that we haven't really cracked yet, moving beyond just subjective feelings.
So it plugs into that bigger trend we're seeing.
Absolutely. There's a massive amount of investment pouring into AI-powered diagnostics, using brain imaging, using EEG. Companies see the potential for precision medicine, but for the brain. So Firefly isn't just following a trend. They're trying to be a real shaper in this new field. The scale of data, the potential insights. It could genuinely change things if they pull it off.
Okay, that makes sense. So beyond the tech itself, what about their strategy? What moves have they been making? Seems like they've been pretty active recently.
Yeah, they've made some notable moves. Definitely shows ambition.
Like that acquisition back in May 2025, Evoke Neuroscience.
Right. That was significant. Not just buying assets, it was strategic. Aimed at expanding their database, which is crucial for AI boosting their IP and, widen their commercial reach.
And that cost them, what, about $6 million?
Around $6 million, yeah.
Yeah.
Which isn't trivial for a company at their stage.
And speaking of money, they also raised capital through warrants recently.
Correct. They pulled in about $8.8 million from warrant exercises.
Just quickly, warrants are like options the company issues itself, right? So the cash goes straight to them.
Exactly. Investors buy new shares at a set price.
Yeah.
Good way to inject capital. This particular raise involved two tranches, shares at $6.83 and some at $4.
And the upshot is a stronger cash position, buys them some time.
Right. They figured strengthens their cash through mid-2026, helps with working capital, keeps the R&D going without needing immediate external funds.
Okay, and then there was the NVIDIA Connect program acceptance. That sounds like a big deal for their AI side.
It really is. It's more than just optics. It's a significant milestone.
What did they actually get out of that?
Access. Access to NVIDIA's advanced software, technical training, engineering help, even discounts on hardware and software. It's tangible support.
Their executive chairman, Greg Lipschitz, seemed pretty bullish on it.
He did. He called it an important step toward building a foundation model of the human brain using EEG data. That's a huge vision.
Wow. Okay. So connecting those dots, the acquisition, the NVIDIA partnership, what does that signal strategically?
Well, if you put it together, the Evoke deal looks like a play to build scale through data and IP, get a competitive edge that way, rather than just trying to win market share organically right now. It beefs up their position because they already have that FDA clearance, and now they add this big proprietary EEG database. Over 17,000 patients, apparently. That's serious training data.
Right. Data is the fuel for the AI.
Absolutely. And the NVIDIA partnership, that's very interesting because it mirrors what bigger players are doing. It could genuinely speed up their product development, their timelines, if they integrate it well.
There's always an if.
Always an if. Which leads to the big question, really. How fast can they turn these foundational moves into actual market presence? Getting doctors to use it, getting revenue in the door.
It's one thing to build the tech, another to sell it.
Precisely. There's a gap between having cool tech and getting widespread adoption.
Right, and you mentioned translating tech to market presence.
Yeah.
What are the main hurdles there? Is it doctors being slow to adopt or maybe regulatory stuff?
It's usually a mix. Regulatory is always there, but yeah, getting physicians on board, changing workflows in clinics, that could be a really slow burn for new tech.
Okay, so bearing that in mind, let's talk about the financials. Because those strategic moves sound good, but the numbers, they tell a different story, right? What did the recent reports show for revenue and earnings?
They do. And look, this is where it gets complicated, but also, frankly, pretty typical for a company at this stage. Q1 2025 revenue was $43,000.
Okay, up from $12,000 the year before. That's a big percentage jump.
It is about 258% year-over-year growth rate. Looks impressive on paper, but, and this is the critical thing, the absolute revenue, $43,000, is still tiny for a public company. Extremely low.
Right, so the growth rate is high because the base is so small.
Exactly. This isn't about current profitability. It's that classic burn now, hope to earn later model you see in deep tech and med tech. Investors are betting on the future potential, the big shift, knowing it costs a lot up front and mean big losses early on.
And the losses, how bad were they?
Well, earnings per share, EPS, for Q1 2025 was negative $1.30. And the net loss widened significantly. It hit $12.93 million in that quarter.
Wow, from $1.12 million the year before, that's a huge jump in losses.
This is a substantial increase.
And other metrics, PE ratio, cash flow?
Price earnings is meaningless with negative earnings, obviously. Free cash flow is almost certainly negative. They're spending more cash than they make. Return on equity, deeply negative, as you'd expect.
Any word on debt? Debt to equity, price to book?
Those weren't disclosed in what we saw. Might be early days for reporting those or just not relevant yet given their structure.
Okay, that jump in net loss, nearly $13 million. You said it's common, but what does it really signify? Especially after buying Evoke, how does it stack up against others?
It's definitely a signal of rising operational costs. It's fundamental for these early-stage firms, especially in R&D heavy fields like this. That jump from around $1 million loss to almost $13 million in a year. That often ties directly to things like integrating an acquisition like Evoke, plus continued spending on R&D, clinical work, starting to build out sales and marketing. The real risk, the operational risk, is that these costs keep outpacing revenue growth for too long.
Right, and compared to the bigger fish in the pond,
their revenue base is much, much smaller than established neurotech companies. And their losses, proportionally and sometimes even in absolute dollars, are deeper. It just highlights how much capital you need in this sector.
Right.
It's expensive to develop and bring these things to market. They're spending big now for a potential big payoff later.
got it. So with those financials, that strategy, where do they actually sit in the market right now? Who are they really up against?
Position-wise, you'd have to call them an emerging challenger, maybe even a laggard compared to some, but definitely with ambition. They're not an industry leader yet.
And the competition.
It's a varied landscape. You've got companies like NeuroPace. They do responsive neurostimulation,
Yeah.
mainly for epilepsy, different tech-related field. Then there's Cerebell. They're known for rapid response, EEG, used more in emergency settings, quick diagnostics.
So how does Firefly try to stand out?
Their angle is really that AI-driven analytics platform, targeting both the pharma research side and the day-to-day clinical practice. The differentiator is meant to be turning that complex EEG data into something doctors can actually use easily. Actionable insights. That's the pitch.
But surely those bigger competitors, the ones with more money and established sales teams, are a huge challenge.
Oh, absolutely. That's a major hurdle. Competitive pressure from incumbents with deeper pockets, existing relationships, distribution networks. It's formidable.
And even the NVIDIA partnership, while good for Firefly, aren't the big guys doing similar things, partnering with tech giants?
You're spot on, yes. While the NVIDIA link is positive for Firefly, you have to assume the larger players are also securing partnerships with major tech firms. They need the computational power, too. The game is often about scale, getting advantages through better hardware, cloud computing, processing massive data sets faster and cheaper. So Firefly gets a boost, but it doesn't necessarily mean they leapfrog everyone.
And beyond the competition, just getting doctors to adopt any new diagnostic tech is hard, right?
That's a huge industry-wide challenge. It's not just about getting regulatory approval. Market adoption rates for new diagnostics can be slow. It takes time, solid clinical proof, and a lot of effort to educate physicians and integrate something new into how they already work, especially when it involves complex AI.
Okay, so that paints a pretty clear picture of the challenges. Let's try and wrap this all up. What are the core risks and opportunities facing Firefly, and what's the market mood right now?
All right, risks first. We've touched on most of them. Ongoing operational risk, costs outpacing revenue. That's number one. Potential regulatory delays, always a factor in medtech. Integration risk after the Evoke deal, making it all work together smoothly. The cash burn, they'll likely need more money down the road if sales don't ramp up fast, which could mean dilution for current investors.
And the competition we just talked about.
Definitely, competitive pressure is huge.
And market sentiment. What are the charts saying?
It seems pretty bearish lately. The stock closed recently around $3.02, and it had been sliding for a few days from near $3.23. Trading volume wasn't anything crazy, no unusual spikes, technical indicators, mostly leaning bearish. You mentioned the Fear and Greed Index was at 39, fear. The RSI Relative Strength Index was near oversold.
Oversold can sometimes mean a bounce is coming, technically.
Technically, yes.
Yeah.
It's just heavy selling pressure might be exhausted, but it's just a technical signal, not a guarantee of anything fundamental changing. Doesn't mean it will bounce.
And analysts, what are they forecasting?
Short-term forecasts seem negative. We saw projections pointing towards maybe $2.50 by mid-July, so near-term caution.
Okay, that's a hefty list of risks and concerns. What about the flip side, the opportunities?
There are definitely opportunities.
Yeah.
That stronger balance sheet after the warrant money gives them breathing room for R&D. Less immediate pressure to raise cash. The NVIDIA partnership, again, if they execute well, could genuinely accelerate their tech development, give them an edge.
And the Evoke acquisition, despite the integration risk.
Right, the potential upside is expanding their commercial reach. Using that bigger database and broader IP to strike new deals, drive new revenue. That's the hope.
It seems like most commentary is focused long-term potential versus the short-term bumps.
That's very typical for these kinds of stocks, small-cap, biotech, AI plays. Investors are often cautioned about volatility. And you see that here, the positive news about funding in NVIDIA hasn't fully overcome the generally bearish mood in the wider sector right now. It's not just about Firefly-specific news.
So it really boils down to one key question then.
I think so. Can their cool tech and smart strategic moves actually translate into real, sustainable commercial success, make serious money before they burn through their cash? That's the tightrope they're on. Their future really depends on navigating that successfully.
That sums it up well. So putting it all together for Firefly Neuroscience, where do we land? Our analysis looking at everything kind of points towards a hold position right now.
Yeah, I'd agree with that assessment based on what we see today.
You've got the strong innovation, that FDA clearance is a plus. The recent strategic moves like Evoke and NVIDIA show they're trying. Those are real positives.
But then you weigh that against the persistent lack of profit, the really low current revenue compared to how much they're spending.
So the key takeaway for you, our listener, is really watch how they execute. Success hinges on making that Evoke integration work, and crucially, getting doctors and researchers to actually use the BNA platform. Wider, faster adoption is key.
Keep a close eye on their next few quarterly reports. Those numbers will tell a story about whether they're gaining traction.
Definitely. Okay, and before we wrap up, a final thought for you to chew on. Think about how fast AI and neuroscience are moving. If a platform like BNA or something similar really takes off and becomes widely adopted, how could that fundamentally change things? Not just how we diagnose brain conditions, but how we maybe proactively manage brain health, mental well-being, over the next decade.
Imagine preventative insights, truly personalized treatments based on real-time brain network data.
The possibilities are kind of mind-bending. Something to think about. All right, that brings us to the end of this deep dive on Firefly Neuroscience. We really hope this exploration has left you feeling more informed, better equipped to think critically about this really fascinating area where medicine, technology, and AI all meet. Thanks for joining us.